on. Our next topic is MaybankIB Research Malaysia ESG Compendium and Bursa Sustainability Roadmap, which will be presented by Mr. Anand, Malaysia Head of Equity Research, Maybank Investment Bank, and Ms. Amelia T, Director, Group Sustainability, Bursa Malaysia. Over to you.
Hi, good afternoon, everyone. So for this session, I'll be kicking it off, and then we'll move on to a presentation by Amelia as well, and then we can go to Q&A. Let me just share some content. I have some slides just to give you a context as to what we've been doing at MKE on the sustainability front among the research team. So it's really been a journey for us as a research team. So MaybankIB, we are present in 7 countries, 6 in ASEAN, and as well as India. So we have about 40 analysts covering about 300 plus stocks. And we started our ESG journey in terms of, getting up to speed on ESG issues for the corporates we cover in the middle of last year, where we came up with a template called our ESG tear sheets. And this is a 1-pager sheet, which I'll show you shortly, which really gets the analysts to engage with the company on key E, S, and G criteria and put them out, sort of flesh them out in these tear sheets. So it's very much qualitative in nature. We did not score the companies, but we got the analysts and the companies to engage in that discussion. And in the process, the analyst team became much more well-versed on ESG dynamics for their respective coverage. And we started this process for companies where, the big ones, basically, with market cap above $1 billion US. So let me give you an idea of the initial format for these sheets. And this is one we did for, or TJ did for Burma's Auto, which is actually one of the best rated or the best rated stock in terms of ESG risk score by Sustainalytics, which is our partner. And you can see that he's covered all the key reasons why, the score is what it is. I mean, on the E issues, very clear measurement of emissions and very clear targets. On the S issues, very clear social policies and labor relations policies as well. And in G, very well composed board. And if you look in particular in terms of board committees, you can see that B Auto is one of the few companies which has a sustainability working board committee as well, in addition to a risk management committee, which in itself is quite rare outside the banking sector. So this sheet really encompasses the key pros and cons of the company's ESG dynamics. And crucially, right at the top, it relates back to the business model. Because why do we care about ESG? It's not for ESG's sake per se. It's about how it relates to the business model and how the business model will survive ESG criteria or relevancies going forward in terms of profitability and in terms of for you returns on capital. So that was the starting point, these tear sheets. And if I flip forward a little bit, this is our progress at this point in time across the MKE platform. We have over 70% coverage now of completed tear sheets, and we will reach 100% for all the countries by the end of this year. So I guess the message here is not only will we have complete coverage, but we'll have a lot more small mid-cap coverage as well, which is where I think ESG conversations and disclosures are most lacking, and where our analysts can value add the most. So the next stage of our journey after the tear sheets will be explicitly integrating ESG assessments into our earnings forecast, valuations, and stock ratings. Obviously, we do this to a very limited extent at the moment, especially for governance issues, in terms of raising the discount rate or lowering PE multiples. But obviously, there's a lot more we can do, but that requires us to have a certain level of knowledge, which we expect to reach by the end of this year. The second step in our journey has been the partnership with Sustainalytics. So, this brought a quantitative element into our understanding of the ESG factors for these companies. And we've embedded at least the major headline quantitative company scores from Sustainalytics in our task sheets now. And you'll be aware of the Sustainalytics methodology, but maybe I can show you what our task sheets now look like. So the same task sheet, Burma's Auto, you can see that we've now included, for all the stocks we have under coverage on task sheets, which is about 61 at the moment, this box in the top right, which gives you the basic scores from Sustainalytics in terms of risk rating, momentum, when it was last updated, and of course, the controversy score. So obviously the analysts will have access to the full report from Sustainalytics. So, this task sheet is not meant to be the be all and end all of our ESG knowledge. Like all research, there's a lot more beneath the surface of what you see in this one pager. And it's really an invitation to start a conversation with our analysts on what we see on the ESG front for the companies we cover, with these scores as well being a basis for conversation. So coming back to the presentation, the third step was putting all of this together, all our knowledge together in a compendium. Until now, or until 2 weeks ago, obviously we have a lot to say on ESG now, but it was coming out in a very unorganized fashion, as in when the analysts were sufficiently able, they published their task sheets in their companies. So the compendium, which we published 2 weeks ago, the cover page, which is this, incorporates really the 61 task sheets we've done so far, and also looks at more macro issues, like what is the government doing in Malaysia in terms of sustainability issues, and what are regulators doing, as well as corporates. So it's meant to be holistic on a per country basis. So when we talk about the compendium, it's important to note that not only does it contain this macro view of sustainability issues in Malaysia, it also has the by company task sheets and sector views, which the analysts contribute to. And these compendiums, obviously for MKE, Malaysia has kicked off, but we would expect the other 6 countries to publish their compendiums in the next 1 to 2 months as well. So we will have a holistic ASEAN view of where we are on ESG and sustainability matters. And that's very important for us, because obviously we want to do a lot more cross-country, cross-sector comparisons across ASEAN in terms of ESG metrics. And we will be able to do that once we have all these compendiums in place and the task sheet coverage reaches 100%. So what do we do with all this knowledge? We've come up with an ESG portfolio by combining the qualitative analyst inputs and the quantitative data reference points from Sustainalytics. So we've combined this bottom-up forward-looking insights for the task sheets with the detailed industry and management-centric risk scoring by Sustainalytics to generate our maiden ESG portfolio. And to give you a flavor of that, these are really top-down view of the rankings rated by scores from Sustainalytics. If you wanted to be very simplistic about it, you would just take all the low-rated ESG scores and put that into a portfolio. But obviously, as I mentioned before, ESG is not an end in itself. You need to look at the business model and whether you can make returns on the company regardless of its ESG rating as well. And this is quite relevant in terms of the momentum indicator, because if you look at our ESG portfolio, you can see it's very diverse, right? From many different sectors, and in terms of risk category, we don't just pick low. We also have some medium and some high risk companies in there as well. And that's because research has shown, and I think this is quite intuitive as well, companies which are improving their ESG scores or going from a bad place in terms of ESG to a better place tend to be the ones that generate the alpha. And scores which are not great right now, which we think, based on analyst input and forward-looking forecasts or expectations will improve, we think should be in this portfolio, and they are. And that reflects really the sort of the combination of the Sustainalytics score, but also the overlay from our analysts in terms of forward-looking expectations, which are crucial ultimately for your investment returns on your ESG picks or your ESG portfolio. So that's really the journey so far. And before I pass it on to Amelia, these are some of the charts we have from a more macro perspective in the report, because everything has to be put in context. Everything that's happening in the corporate sector has to be put in context of what's happening at the country level, and where we stand in terms of policies by both the government as well as requirements by regulators. And the report card is kind of mixed. You can see here, issues like carbon pricing, EV incentives and sales. Really, we do have a long way to go, even when comparing to our ASEAN peers. In some areas as well, which tend to hog the ESG limelight, like dependence on fossil fuels for power generation. We tend to be not looking great. And there has been a bit of a reaction on the market as well, especially in terms of foreign shareholdings for stocks in these sectors, as well as performance for sectors like plantations. And we always make the point that ESG investing is a little bit like Sharia investing. And Sharia is a form of responsible investing, and that's been around for 20, 30 years in Malaysia. When it first kicked off, people didn't really, give it too much airtime. It was considered a niche sort of investing focus. But obviously, as it got bigger, you had this virtuous cycle. As more and more money becomes Sharia focused, if your company is not Sharia, compliant, then you're missing out on this huge pool of investment, which is growing dramatically. And you can see from this PRI chart, the pool for sustainable investment is growing dramatically. So when we talk to corporates, we always tell them, do you want to cut out or ignore this pool of money by being non-compliant, or do you want to, invest in being sustainable when there's clearly a market for it and there's performance related to it as well? So I think this really encapsulates the argument for corporates to really raise their game. You have to, if you want to continue to outperform from an investment perspective. So that's my slides. Let me stop there and pass it on to Amelia.
Good afternoon. Can you see my slides?
Yes, Amelia, we can see.
Okay. Good afternoon, ladies and gentlemen. So what I'd like to talk about for the next 10 or 15 minutes is about our sustainability roadmap. Allow me to start with our 2019 to 2020 roadmap. This was the first ever roadmap that BursaMalaysia had developed, and it was done after much benchmarking, research, and most importantly, stakeholder engagements. And it was based on material matters that we had identified and refreshed. You may ask, why is there a need for a sustainability roadmap over and above perhaps your business plan or your strategic roadmap? Well, we think that a sustainability roadmap is very important to ensure that the whole organization is able to move forward in a cohesive manner towards that common goal of becoming, for us, a sustainable marketplace. So it's not something that can be achieved by just a section of the organization, but it requires the concerted efforts of all divisions across the company. And for our employees, management, the board to think and behave and to execute in a certain way that contributes to sustainable development. So under this 2019-2020 roadmap, we had 5 strategies, as you can see here. Strategy 1 is focused on elevating the quality of our PLC's sustainability practices and reporting. Strategy 2 is about attracting more investors through SRI products and services. Strategy 3 is about Strategy 2 is about establishing Bursa as the go-to marketplace that champions climate action, while Strategy 3 relates to SRI. Strategy 4 is about fostering a financially savvy community through financial literacy. And the last is about enhancing our own sustainability practices and reporting. Now, I'd like to elaborate a bit more about the first two strategies that relate to our capital market. So firstly, about enhancing corporate governance and sustainability practices. This is something that we feel very strongly about because we think that to have a sustainable capital market, all our PLCs must embrace sustainability and have a strong ESG performance. It is no longer, and we've heard this being emphasized over and over this morning, that sustainability is no longer nice to have. It is an imperative for resiliency and for a sustainable future. So we have put in place since 2015 a sustainability reporting, a mandatory reporting framework. And since 2017, we have been reviewing the sustainability reports of PLCs on an annual basis. And we share with these companies our findings and recommendations to help them improve their own practices and disclosures. And we continue to provide advocacy and training guidance to our companies to help them along on their sustainability journey. And to this end, we had launched Bursa Sustain, which is a microsite that is focused on sustainability, corporate governance, and responsible investment. In the area of SRI, products and investments, we launched FTSE for Good Index, which has really grown threefold since it was launched. Now we have 75 constituents, as you've heard from Helena this morning. And in helping our SMEs to access the capital market, we launched the lead market. And today we have 38 companies listed on that platform. And we, to drive sustainability leadership, we continue to participate actively in several committees and working groups, both at the domestic and international level. And this includes the platforms like stock exchanges, Sustainable Stock Exchanges Initiative, SSE, as well as WFE, Sustainability Working Group. And at the domestic level, we have JC3 and the CG Council. Now I'd like to talk a bit more about our roadmaps for 2021 and to 2023. To reinforce the importance of sustainability, last year we updated our vision statement to read as to be ASEAN's leading sustainable and globally connected marketplace. And sustainability, as you can see, is one of the 5 strategic pillars that are captured in the strategic roadmap. And this pillar talks about embedding sustainability in our organization and in the marketplace. Now, this shows our sustainability roadmap for 2021-2023. It is based on 5 priority areas that are vital to us, to Bursa Malaysia. And they are also differentiated according to 3 focus areas that reflect the roles that we play, both as a market regulator. So these are the ones that you see under priority areas 1 and 2. And then internally as a listed company, the strategies are reflected in priority areas 3 and 4. And for the community, we have priority area 5. So under priority area 1, we talk about strengthening our core. This is about building capacity of our market participants, because we truly believe that education is an empowerment for our market participants. Priority area 2, driving our growth, is about enhancing the sustainable and responsible finance ecosystem through products, through new investment products, as well as through having high standards of sustainability practices and disclosure. So you will see that these two are quite familiar. They have also been captured under our previous roadmap. And priority areas 3 and 4 are more internal, inward-looking. And through these areas, we intend to reduce our environmental footprint. We are actively taking steps to measure our environmental performance. This year, for instance, we are doing an energy audit to see how we are consuming energy, and how we can, where are the opportunities to improve energy efficiency. And we have plans to move towards carbon neutrality in the next couple of years, with eventually hitting net zero also perhaps by 2050. Now, when it comes to empowering our workforce, we aim to develop to strengthen the culture of sustainability within our among our employees, and so that they are also able to develop more sustainable approaches. For priority area 5, we intend to create positive impacts for our communities. As a responsible corporate citizen, we cannot ignore the communities and the environment around us. It means being a responsible corporate citizen means that we must also do good and give back to society and do our part also for the environment. Now I'd like to focus a bit more on sustainability practices and disclosure, because as I mentioned, we cannot achieve our vision of being a sustainable marketplace if we do not bring our PLCs along on this journey towards a sustainable future. It's been more than 5 years since we launched the sustainability reporting framework, and that we believe is a significant milestone in pushing the companies to pay more attention to this topic of sustainability. So we feel that now it is timely for us to review these requirements, because obviously there are so many significant developments taking place at the global front. Yeah, so we think that it is timely for us to review the requirements so that we can ensure that our reporting requirements continue to meet the informational needs of our key stakeholders, in particular our investors, and that our requirements remain on par with the latest sustainability reporting developments. So you've heard from Helena this morning that there is a global movement where IFRS Foundation has announced its intention to form a working group to accelerate convergence in global sustainability reporting standards, and in trying to drive international consistency of sustainability related disclosures, with a focus on enterprise value creation. So we are watching this space very closely. Obviously, as both a listed company as well as a market regulator, we also feel the pain of the complexities of reporting, especially when there are so many different international frameworks that relate to reporting. And we will also continue to provide guidance and support to our listed companies to help them improve their practices, their sustainability practices. And one of these ways is to leverage our Bursa Sustain microsite. So we will continue to enhance the content and to feature more leadership pieces. Some of you from the listed companies would have noticed that we have issued our chairman's inaugural letter that is addressed to all chairpersons of listed companies. And this we issued on the 9th of March this year, which is also available on Bursa Sustain. So this was the first time that Bursa Malaysia had reached out to our listed companies with our chairman's personal message that touched on several key sustainability topics, such as the importance of sustainability, especially during the pandemic, talking about climate change and how building back better for Malaysian corporations must mean building back equitably for both the people and the environment that support us. In addition to this, we also intend to have a special column for our CEO again on Bursa Sustain to talk about hot topics that relate to sustainability. So I urge all of you to watch that space, come and visit Bursa Sustain. Now, last but not least, I'd like to talk about a bit on this corporate sustainability practitioner competency framework that we are working on in collaboration with UNGC, Malaysia and Brunei. So this is a framework that is intended to serve as a reference point for determining job capabilities and core competencies for sustainability professionals, with the hope of having a facilitating companies in doing a structured talent development within the corporate sustainability sphere, in order for us to then have high quality practitioners in the marketplace. So this is my last slide. It has been a very challenging year for many people, many companies. Many companies have suffered. At the exchange, we will continue to work together with our stakeholders to drive the sustainable development agenda. We are well aware of our role and our influence being an exchange at the heart of the capital market. We aim to leverage that to be an agent of change and to be a catalyst for a sustainable marketplace. So thank you. Thanks for your kind attention. So I'll pass it over to the moderator, Johan.
Hi, good afternoon. Thanks, Amelia. I'm the moderator for today's session. Now, while we await for a couple of questions coming into the Q&A box, please remember to type in your question in the Q&A box. While we await for a number of questions, maybe I'll just kickstart with a few questions of my own. The first question is to Amelia. Now, Amelia, the Bursa sustainability journey in both capacity as exchange regulator and also regulator and operator, and also as a corporate entity, has come a long way with the establishment of a dedicated committee for sustainability in 2010 to the launch of the FTSE for Good Bursa Malaysia Index 2014, implementation of sustainability disclosure listing requirements from 2016, and the new sustainability policy last year. Now, and Bursa sustainability roadmap is already into its second phase. Now, from your presentation just now, it would seem that the roadmap, the first roadmap, which was for 2019-2020, the priorities were actually on raising awareness, mandatory reporting, as well as SRI products. Correct me if I'm wrong. So what have been, that was the priorities, what have been the key achievements of the roadmap 2019-2020?
Yeah, thank you for that question, Chuhan. Indeed, our focus under the first roadmap was on a lot on improving the sustainability practices of our PLCs and at the same time in strengthening our own internal sustainability management, because we believe in leading by example. Well, while I cannot, because I'm not from the regulation team, so I'd like to just comment on broadly on the achievements that we've had in that space for our listed companies. And as reported in our SR, we had actually ramped up the review of our PLC's sustainability reports. And last year, we had increased our sample size to 300 with the help of a minority shareholder watch group. And we found that the average compliance levels for these disclosures was 93%, which is very good. And the average quality scores was at 68%. And for the top 100 PLCs, their average compliance level was even higher at 98%. And the average quality scores was at 77%. And that's understandable because these are the bigger companies and with more resources and experience in doing sustainability. And with the FTSE for Good, we have seen an improvement in the number of constituents on it to 75. That is also a testimony of the improved practices of sustainability. Now, on corporate, for our own internal management, a lot of focus was on corporate integrity last year. And I am sure most of you will appreciate why. It's because of the coming into force of Section 17A, where of the MACC Act, with the corporate liability provision. So, and our own listing requirements requiring all listed companies to put in place anti-corruption policy, procedures, whistleblowing procedures and all that. So we had all that done. And over and above that, we also did an organizational anti-corruption plan, which is something that most the government agencies were supposed to do, but we also did to guide our corporate integrity enhancements for the next 3 years. We also issued a vendor code of conduct. For ourselves, as a listed company, we had also managed to improve our own ESG score for FTSE for Good. And we are proud to have been included in the Bloomberg Gender Equality Index for 2 years, since January of 2020.
That's quite a fair bit that you have actually achieved from both exchange as well as a PLC perspective. Now, as we go into Roadmap 2.0, or this is how I term it, 2.0, which is from the Sustainability Roadmap 2.0 or for the year 2021 to 23. What does Bursa hope to achieve at the end of it? Any quantifiable targets that you can share?
Well, the second roadmap is obviously an opportunity for us to improve on the first one. It's to build on the progress that we have made so far and to leverage or to learn from the lessons and the gaps where we had not done so well. But at the same time, it was also to enable us to tap on opportunities in line with the latest emerging trends and best practices. So if you ask for, quantifiable results, with sustainability, it may not be so possible, but like I said just now, and in terms of the environmental performance, we aim to be carbon neutral within the possibly by the end, if not earlier, of the roadmap, the second roadmap. And we hope to facilitate the issuance of more ESG related products and services. And obviously, with the PLCs, we do hope to continue to see improvements, not just among the bigger companies, but also the mid and smaller companies. And we will support that through our review of our list, our reporting framework, as well as continued advocacy and education and training. And with that, for the education and training, we aim to continue to expand our reach to more and more participants in all areas, in that, be it investor education, corporate governance, for sustainability. For sustainability, we also would like to extend it to all our retail investors, because I think there's more and more awareness among the retail investors about sustainability, and there is a hunger to know more. So we aim to provide more content that are directed at them. And then last but not least, for the community, we have a 3-year CSR plan that is part of the new sustainability roadmap. We aim to create more positive impacts through for the society and the environment through, for instance, if I could just name one project here, Sensibility, which is a financial literacy program that is targeted at the masses. So we have already started the programs, and to date, I think we've managed to reach almost like 400 to 500 participants.
All right. Okay, over to Anand. From your interactions with the financial market participants, which are the regulators, the asset manager, do you think that the regulators and asset managers, they are doing enough to promote sustainability and ESG integration? And where can we do better?
Yeah, thanks, Joanne. Yeah, no, I think for the regulators, as we make clear in the compendium, there is very good progress on many fronts. So, Bank Negara, in terms of requiring climate risk disclosures by financial institutions, the SE, its role in terms of sustainable and responsible investment roadmap, and encouraging or incentivizing green financing, which is a huge growth area globally. And of course, Bursa, as Amelia has articulated very well, their drive to improve corporate disclosure. That's on the regulator side. And on the asset management side, we're also seeing good progress, I think very much led by the biggest asset owner of all in market, which is EPF. They've already set very hard targets in terms of incorporating ESG into all their investment decisions by 2030. And they've been putting a lot of resources into that, as us on the sell side, we well know, in terms of a dedicated research team and a sustainability resource center, etc. So that's all the good news. I do think, though, there is room for improvement. I guess on the asset management side or asset ownership side, I guess a greater push into active stewardship would be very welcome in this market. I think Malaysian asset managers tend to be quite a reticent bunch. Even when there are ESG issues to raise, they are not raised in a cohesive or in a public forum to encourage corporates to change their behavior. So I think active stewardship is something we need to focus on a lot more on the asset management and asset ownership side. And in terms of disclosures, corporates are like people. They don't do things unless they're forced to or they're incentivized to. And it's same with disclosures. When our analysts talk about the companies in their sectors, disclosures are decent, but they're not very standardized, and they're not gold standard. So I guess we should explore ways to incentivize corporates to adopt gold standard ESG disclosures. Maybe offer them something in return. If you meet these standards which we have set out for you, maybe we will excuse you from quarterly reporting or something like that, which all the analysts will cheer as well, by the way, and just go to interim reporting. A quid pro quo, because I think that's the best way to incentivize corporates and also to educate them that ESG is not just about risk, it's also about opportunity. Yeah, and that message would be much more cohesive if they can see a tangible return from their dedication to that requirement. Okay,
thanks. Moving back to Amelia, in advancing the sustainably financed agenda, Bursa Sustainability Roadmap, the one for the next 3 years, 21-23, mentioned about exploring new variations of an ESG index to complement the FTSE for Good Bursa Malaysia Index. It also mentioned potentially, or for example, a green index should provide new investment opportunities in a public listed company with exposure to green revenues. Now, would you be able to share some of the key parameters of this new index? And also, can we expect this new index to be launched sometime this year or next year or in 2013? And is there any other new sustainability theme investment products that we can expect over the near term?
Yeah, we have observed a significant increase in the number of global ESG indices over the last few years. And according to the Index Industry Association, IIA, there was a 40% increase in the number of ESG indices in 2020 compared to the previous year, the highest year-on-year increase in any major index class. For us, we are definitely looking to launch more thematic ESG indices for the local market, and we are working hard, to with the local institutional investors to see what are their needs, because these products obviously have to be driven by customer demand and customer needs, the requirements also of the index users. So it's very early days yet. We are still in talks with our potential clients or customers and stakeholders on this.
Okay. And also, you did mention that in the sustainability roadmap for the next 3 years of an upcoming review of the sustainability disclosure framework to raise the availability, quality, comparability of sustainable disclosure of public listed companies. Would you be able to share on some of the new areas of disclosure, and with environment protection being one of the priorities under your new roadmap, can we expect climate-related disclosures to be included as well?
Yeah, in this on this question, I can't preempt what my colleagues will be doing. Yeah, but suffice to say that they are looking to address, what I had mentioned earlier, to address the informational needs and expectations of our key stakeholders, and to ensure that the requirements remain on par. So I think what the focus will be is to try and achieve some form of standardization, because for investors, the often heard complaint is the fact the data that is provided, disclosed by the listed companies is so varied, it's so difficult to compare. Each company is disclosing according to what they think is material, which is very important, because we can't have a broad brush for all sustainability related matters. But we are aiming to have that to ensure that we are able to enhance the quality, availability, and comparability. And we are also considering differentiated approach, looking at perhaps whether it's possible to have certain types of companies report in a certain way. Perhaps the bigger companies have certain mandatory disclosures, and then the smaller companies lesser. But all this is up in the air. Yeah, it is being considered. It is being thoroughly examined. But I will also say that that when it comes to environment, that is certainly one of the areas that will be part of the review.
Okay, thanks. So I guess the keywords that I picked up are standardization, differentiation, as well as a potentially environmental disclosure. Okay, while we await for a couple more questions coming from the participants today, over to Anand. Question to you is, how does Malaysia's historical dependency on oil and gas industry sit with the accelerating global transition to low carbon economies? How big of an economic risk does this potential vulnerability pose to Malaysia as a whole?
Well, it doesn't sit well, and it's a huge risk. It's really the short answers to that question. I mean, we have about 3 trillion ringgit of fossil fuel reserves in the ground. which is part of our country's wealth. That's 2 times our GDP. So we never had a discussion about what would happen if this wealth was impaired to a dramatic extent. We all know the world is behind on their climate goals. So policy, and this may come as early as November at COP26, policies are just going to get tougher and tougher on fossil fuel emitting industries. And that means fossil fuel usage could fall off a cliff in the next couple of years. So what does that mean for Malaysia when it's such a big part of our GDP? And we don't seem to have a plan to replace it with another industry. And it's also 20% of our fiscal revenues. Do we have a plan to replace those revenues with another tax source? So to me, it's a conversation is long overdue for our policymakers to have with our business leaders and with people, because it does represent a huge risk to our economy. And we're just trying to ignore it right now. But I think given the way the world is going, we won't be able to ignore it for much longer.
While we are on the topic of the specific industries, for those in the plantation and the manufacturing industries, a couple of corporates have actually been generating some pretty negative ESG headlines of late. But then again, their share prices have held up. So the question is this a false sense of security? And what are the wider ramifications for Malaysia as a whole relating to key economic growth drivers like trade and FDIs?
Yeah, good question, Chuan. I think the reactions we've seen from these companies, which have been implicated by negative ESG headlines, has been very strong and very correct. They've done their best to rectify the issues as quickly as possible. But there is no stronger disciplining force in capital markets than seeing your share price go down. And in Malaysia, that doesn't happen very often because we have a lot of trapped domestic liquidity in the system, which tends to keep share prices elevated. And we have a lot of, shall I say, loyal shareholders, long-term shareholders who don't sell no matter what. So that disciplining requirement, I would say, is quite lacking in our capital market for those reasons. So yes, I think there's a little bit of false sense of security, which may be impairing the corporate sector's need to move forward on sustainability issues a lot faster. And this has wider ramifications, not just their share price, but we have huge economic blocks like the EU talking about carbon border taxes, which basically means if a Malaysian corporate wants to export to the EU, they will be taxed on the carbon input into their exports in the future. If our corporates are not responding to that because they have this false sense of security that everything is fine and their share prices are okay, then we're just setting ourselves up for a fall. And it's same with other issues like FDI. No MNC will want their brand or their product associated with a country with negative ESG headlines, regardless of what the share prices in that country are doing. So I think, yes, there is a little bit of false sense of security, and that has to be addressed.
All right. Amelia, back to the topic on sustainable finance. What are the key challenges that Bursa has experienced in driving or advancing that agenda? And what are the challenges that Bursa foresees moving ahead?
Right, that's a very good question. But allow me to first define what we think about when we talk about sustainable finance. So to us, sustainable finance, which we have actually stated this as one of our material matters. When we talk about sustainable finance, we are talking about mainly 2 aspects. One is ESG reporting or sustainability reporting by our PLCs. And secondly, it's about facilitating the development of sustainability themed investment products. So the challenges in these 2 areas are several, which I can name. One is obviously the inherent subjective nature of sustainability. And I've alluded to this earlier when, the sustainability being something that is materiality based, which can vary from one company to another, which results in data being reported that differs so much that sometimes it's very difficult for investors to make sense of it. So that is a major issue that investors have highlighted, and is an issue that we continue to grapple with. But we are seeing some light, at the end of the tunnel at the global stage, and locally we are trying to address it through our review of our reporting framework. Secondly, if I could say, it's about the mindsets of our listed companies, where some of them continue to look at sustainability as a compliance matter rather than truly embracing it. They do not want to be the one having to incur the cost to opt for a more sustainable solution. So that we are looking to try and change that compliance, tick the box mindset to one that embraces self-regulation and takes charge of sustainable growth for their organization and the industry. Thirdly, it's about definitions and taxonomy. What is considered to be green? There's no one definition. Bank Negara and SE have done tremendous, excellent work for the FIs in coming up with the climate change and the principle-based taxonomy. It's indeed very timely and much needed, but we continue to see that there is a need for further work to be done in this area. And last but not least, sustainability is an ecosystem play. It requires all the various key all stakeholders to come to the table, whether it's the companies, the public and the private sector, businesses and consumers, investors, the shareholders, CSOs, NGOs, the like. Everyone has a part to play.
Right. Okay, Amelia, we have some questions for you from the participants here. The first question, I think, is more related to Bursa as the PLC or entity. The question is, what are the obstacles to ESG adoption at the board of, it may not be related to Bursa as a PLC, but the question is, what are the obstacles to ESG adoption at the board of directors level? And what solution is Bursa promoting to overcome these obstacles?
Yeah, as I mentioned just now, at the board level, perhaps it's a question of mindset. It's a question of priorities. Yeah, some companies are obviously during these times of the pandemic. Some companies are in dire straits. They are fighting to survive. But we are also hoping to see that the mindsets could change from looking at what is immediate, having the pressure to generate returns on an immediate basis, that they can take a longer term view of the business, so that it is not about just looking at the impacts that the company is creating now, but how the company is impacting the environment and the society in general moving forward into the future. So we are, to do this, we are adopting many approaches, especially from the regulation side. It is about engagement, talking to these companies. It is about advocacy, creating awareness, also looking at potential incentives to encourage the companies to embrace sustainability.
Would you be able to share on some of the incentives?
Well, I know that the teams within Bursa are working very hard on the budget announcement. So yeah, we are looking at various angles on how we can incentivize not just the companies, but even the investing public.
Okay. All right. The next question is, will Bursa be looking at providing scores on the PLC's ESG ratings?
Okay, by this PLC's ESG rating, I assume that you're referring to the FTSE ratings for the constituents. Yeah. Actually, the list has been made available, and for each company, sort of a rating has been given in terms of the number of staff. So it is available on our website.
I
Happy
think
to share the link,
yeah.
to the person.
I think the question is, will you be looking to provide more than the star ratings?
Not that I'm aware of at this point in time. But what we do, as I said, based on our review of the reports, we do give recommendations to the companies themselves directly, so that the board of directors can take note of our observations and take steps to improve accordingly and to close the gaps.
Okay, and I don't see any more questions in the queue. And mindful of the time, is now 12:54. So I think I'll bring this session to a close. Thank you so much, Emilia, for being with us, Anand, and thank you, and back to Asa, MC.
Thank you, Chuhan. Thank you, Anand. Thank you, Emilia. Ladies and gentlemen, we will take a break now and we'll resume at 1:30 p.m. for the corporate session. See you later.